What's going on, y'all? Hope everybody had a great week. Trading last week. It's your boy Brinks Trades coming online to basically do the weekly breakdowns again. This meeting is always recorded, so I don't really care too much about who's online right now, but just know that we're finally back into having these sessions recorded on YouTube, so that they're going to be publicly facing. Um, I'm gonna There we go. Drop the link into my Discord so they can join along if they want to. So hopefully, you guys can hop online and join with me. So let me see. Let me do this. Get rid of that. So again, if you don't know, again, my name is Blake, aka Brings Trades. I've been a day trader for a decade. Um, Started in the Forex space, moved to futures. Now I'm in the space now. I trade pretty much any market, that needs to be traded, whether that's Forex or futures. And so basically, I do this call every week, just as a reminder to show people that it's possible to actually do this. And I break down all of my trades here and the trade breakdowns and basically just talk about, the past week of trading, positions I took, wins, losses, and then go into what I think is going to happen next week. So again, I'm documenting all of this because at some point one day I want to be able to trade for a fund or have a major fund, work with them on trading. I trade right now in the prop firm space because I think that's the closest thing you can get to actually simulating working for a real fund. And it also gives you a lot of leverage to trade. So, first things first, I always want to start the week off by kind of talking a little bit about what I did last week. And so, I tried to log into my Trade Syncer account. And if you guys log on to Tradeify right now, for some reason the journal feature is down, which I'm not really understanding why it's down. They sent an email out last week, like Wednesday, and said that the trade locker feature or the trade journal feature in Tradeify is down. That's kind of what I've been showing you guys. And for some reason, I can't get my trade locker or trade syncer, which is my accounts that I manage together through a trade copier. That's also not working. So I'm going to show you guys basically the screenshot that I dropped in the chat on my Discord last week. And if you hop on here and you're watching, feel free to drop a comment in here. I love when people drop comments, but I'm going to show you guys basically that really quickly, and then we'll go ahead and get into the charts. So again, this is my back end for Talented 10th. As you guys can see, I'm in a bunch of Discords, but really just wanted to join a bunch to see what they all look like. See some people online here. So I know y'all saw that, I'm hopping on. So hopefully we get some people there. Anyway, so I want to go to the general chat. You guys can see this was actually my big trade on Wednesday, I think. And so I ended up making $10,000 in that day. And so that previous to that or prior to that, if you go to I think it's on Threads. I think I posted something on Threads, but basically I showed the other two winners. So I ended up having 3 days of trading this past week. The first day I made 5,000 across all the accounts. I think 5,700. Second day I lost just shy of 7,000 on the second day. So I was actually in the red for the week after that first day. So I think it was like 6.8 or something like that on the day. So I was down like $1,000 for the week, which is, whatever. There's some things I could have did to manage my risk a little bit better, and I didn't do them. It's the third day I came back and was able to make that 10,000. That put me up about 9,000 for the week. So 10,000 for the day, 9,000 for the week. So that's a great week for me. It's actually that was my biggest trade for the year so far. That's also my biggest week so far, 9,000. And so that's putting me on pace to across all the accounts that I've had, the funded accounts. I think I am sitting currently at about 15,000 for the week. And I'll verify that again once I get some access to my trade journals, but it should be like close to 16,000 for the week or for the month of February, which is great because last month I only made 18, right? I made $18,000 last week or last month. So that was kind of like across all the accounts. And you guys know that I'm trading a combination of funded accounts and then a couple evals with alpha futures right now. So technically all that money is in profit. Some of that is evaluation money, but you should be seeing the first round of payouts for this year, hopefully in the next week or so. So I'll be able to kind of document that process as well. But I want to go ahead and get into the charts and break things down. So I'm going to go ahead and remove this and then go ahead and share my screen. I'll go ahead and get into the charts real quick. So basically, again, what I want to do on these calls, I break down all the markets, but then I also go into what I think is going to happen for the next week on these charts. So again, let's start with dollar. As you can see here, dollar is kind of in this level where we've ran liquidity. And so going to the higher time frames, again, I like to start in the weekly time frame just to kind of get a better sense of what we're doing here. Um, and if you look here, you can see that the market has really been trading into this overall old fair value gap, this weekly fair value gap here, which is the SIBI. And so what is this telling us, right? This is telling us that the market wants to continue to run lower, right? And why do we think this? And this was the projection coming into last week, because I wanted to see the market trade up and then run lower. But why do we think that, right? Well, there's a couple reasons here. First, we spent the last couple weeks trading into this range, this gap. You can see there. Respected consequent encroachment of that and immediately rejected. And then this next week was an immediate rejection so far, going back down. And so what am I looking at here? Well, I'm looking at a few levels, right? The first level is this old sell side level here. And we have failed to break through this level. This level sits at 95.88. So ideally, I want to see the market continue to attack this level and rip through. What I don't like, again, is these strong rejections that we've had from this level once, twice, and technically last week we ended. And so that's the ultimate level that I'm thinking. And then I'm looking at sell side, obviously, at each one of these new lows here, right? So the 95.80 level, which is very close to this level. So they're pretty much the same thing. But then that second level at 95.236. All right, so I'm just going to mark this as maybe like a second target / sell side liquidity. And if you guys hear singing in the background, I apologize. I'm at my parents' house this week, and my mom has a great relationship with the Lord, so she is in the background singing praise music. So, let me see here. So coming into the 4-hour time frame, again, same thing here, right? We can see the market has been trading into this fair value gap right here. So ideally, I want to see the market continue to run lower, right? I want to see the market continue to respect this level and then run lower. We did trade to the high end of this gap and then go, take these lows. Now, for my primary first initial target, I guess will probably be this 4-hour low here at 96.17. Then we'll see if we can get a low run back to this old sell side level. And if we get an extended low, running back down here. But this looks very good for continued bearish opportunities. Again, we had this huge rejection from this gap and the markets tend to run lower. So that looks good so far. What I want to do is go to Euro futures 6E, and we'll see if we see the same thing here. Again, these charts are inverse, so they should line up in an inverse direction. And so one of the things right off the bat that I noticed, if we look at the weekly time frame on Euro, is us really failing to get through these levels. And this is the same thing here, right? Like if you put these side by side, right, you can see here immediately that the market has really failed to get through. Oops, go back to dollar. Has really failed to get through this level here, right? We can see that we're trading this old fair value gap here. We're failing to take out this old high, right? So the market has came down here a couple of times and has not really gotten through yet. Now, the tricky part here is, in addition to looking at wicks, you also have to look at the candles of the bodies too and where we're trading at. And so if you notice here, we have not really traded through this fair value gap. And I'm going to drag this up because there's a volume imbalance there. Again, when there's a fair value gap, there's a volume imbalance there, you have to encompass and make sure that's included, because you won't get a really good read on, again, potential liquidity, right, and volume. So again, so what are we seeing here? We saw this market trade all the way through this wick, take out this level here, which is this high. And just like on the other chart on dollar in the inverse direction, we have came to that candle once, twice, but on Euro, we traded all the way through this. Whereas if you bring this back up again and you show this chart, can see that if you look here and then look over at the euro or the dollar, you can see that we did trade through this, but we did fail to break through this one the second time. This will be that low right there, whereas euro traded all the way through. So this could be a form of SMT where the market is saying we need more euro liquidity to get on euro, we didn't need to get on dollar. So I'll reference this again when I look at the 6B, which is the pound futures. But as of right now, we're in a tricky situation because I can definitely see this market respecting this gap and wanting to go lower. But at the same time, we've had a tremendous amount of wicks through this level and have really failed to stay above this initial high that was set back in June of last year. So obviously, one of two things could happen. We can invert this gap and run lower. And if we do, then I would be looking to short this long term pretty much outside of this gap. It'd have to invert this fully, and then I would probably catch the retrace of this, and then see if we can take this lower, which looks like it could be a very clean situation. We have consolidation here, a false manipulation up here, and then running lower. It is very messy though, so that is the thing that I'm keeping in mind. Or we can continue to respect this and run higher. And to be honest, my job is not to really predict what's going to happen, right? It's really more to react to what is happening in cases, especially in cases like this, because in addition to our higher time frame setup, we're going to have a lower time frame setup that's going to allow us to really see what's going on and actually make a better decision when we get there. And so this is kind of an indecision zone for me. Like I can't really take a trade. I can't short or I can't go short long on this because we just said we respected this gap. I'm sorry, we can't. I can't go short on this because we respected this gap. That'd be kind of dumb. But at the same time, I'm not really confident going long because of all of these wicks and where the market's going. And I just need more information from the market. That's why I've really been staying away from currencies the last week or two. But I will say, if we invert this weekly fair value gap, this could be a multi-week. This could even be the start of a quarterly trend where we're just running lower, and that's great to get funded, to get payouts on. If you catch these higher time frame trends, then to be honest, you could really eat for a long time. You could eat for months. So that's really good. Let me go back to the comments. I don't think anybody's on here. So cool. Let's go to 6B, see if we see anything different. So this looks a little bit more promising for bullishness. Why? Because we inverted this fair value. Okay, so let me go back to the weekly time frame. We'll kind of break all this down. So even though this is very much still wicking off of this high, this initial high also was respected. We came into this gap, this weekly fair value gap, which is this green BISI here. And I'll get rid of this so you can see this a little bit better. Get this off of the weekly. So respected that gap. Then the market traded all the way through this level, came back down, traded in once again, and is currently respecting it again. But there are some wicks to the top side. So I have been calling for bullishness, right? And again, it's tricky situation, sticky situation here where the market is giving you a bullish opportunity, but it's wicking off of that level and it's not respecting that high, or it is respecting that high, right? And so in theory, this should be a bullish situation, right? There's nothing here that says go short, right? There's nothing here that says go short. As a matter of fact, there's probably more evidence for this one going long than the other one because we wicked all the way through this gap and mitigated it and then traded back up respect to consequent encroachment. So there's that. But then also at the same time, huge wick here, failure to stay over the most recent high, swing high, which is again set back in June. So just there's indecision here, right? And so I just need more, and I need more decision here. And so there's a couple of things. I mean, like even on this, right? There's a lot of indecision if we jump down to the 4-hour time frame, right? We've inverted some key levels here. This was last week, I believe. Yeah, this was last week, I believe. So we inverted this fair value gap at the opportunity to go long, broke structure to the top side, but then came right back down, broke structure to the downside. We've been in a downtrend here. I need to see more decision from this. And what I mean by decision is I need to see a clear draw on liquidity that I can really attack here before I want to go long. And I don't see that. So I have to kind of go short or stay out. right? And so, and honestly, the decision is more looking like stay out until we get something common. And it's okay to not, you don't have to enter into these trades and positions to catch the very tip of the low or the very tip of the high, right? You can enter into a position when you have more confirmation. Like if price takes this high out and it's solid, then I mean, this might be something that I'm interested in, right? If it takes out this high, or if it fully inverts this low, then I think it's going to give me a direction of where I can go. And I'd rather sacrifice the 100 pips here, 150 pips here to have a longer term play, which could last for months, or sacrifice the 60 or 70 pips here to get that longer term play that gives me a direction for the next few months. So there's a lot of indecision here. I could potentially make out this being a trend line liquidity opportunity here, right? Where the market's respecting that. And but there's just not enough here for me to want to really risk anything. Especially currencies are going to pay you less. They need to be more certain. If I jump to Australian dollar, maybe there's something here that I can see. Australian dollar's been making new highs. So that would have been a great pair to trade last week. Looks like there were some good setups there. NZD, again, I look at all these currencies just to see if there's anything here that I'm missing, or if there's something an opportunity there that I could take advantage of. And it looks like weekly time frame NZD is kind of in the range bound status too. Well, looks like this one's actually looks like it's going long as well. So maybe if you're looking at currencies, maybe Australian dollar and NZD are the ones that you should be really thinking about more. Maybe I could see this market coming up and taking this old high here. Right there. Right. And that looks like it's about maybe 80 points, 80 pips. Not a crazy ton. Again, the biggest currencies, the ones that are going to move the most, euro and pound, right? And then everything else is kind of just hit or miss. You're better off probably just trading indices outside of that. Speaking of indices, again, coming to the terminal, the strategy that I've really been applying a lot when it comes to indices is not necessarily trading long term in alignment. And because we know the markets are choppy, right? You're better off coming to the sessions each day and taking positions that align with the daily bias, right? And so, what is the market trying to see? You're like, what is your 4 hourly bias? Well, in this case, the market closed with us breaking structure, respecting this fair value gap. So my bias really is going to be like, can we get here? Can we take this low? Right. If we invert this, then maybe I can start looking to the top side levels of liquidity. But this is a more fluid strategy. It's really depending more on the day to day versus it is the long term projections. And so you'll see me the day of in my chat, really talking to my students. And I'm really not I'm using the daily, I'm using the weekly. If there's levels there that need to be respected. But for the most part, the markets are so fluid on indices and they're so choppy that, not choppy, but they're so like volatile that it's really hard to nowadays, especially Trump administration, et cetera, that it's really hard to look for targets that are long-term hits, right? I'm really just trying to figure out what is the bias for the day, what do we have a chance to do, and can we run in alignment with a 4 hour bias instead of a daily or weekly one. So for instance, in this case, I do want to see the market take this low, right? We did break structure, we ran up here, took out this low, inverted a series of fair value gaps, formed a new one, a new city. And so I want to see if we can get here, right? And that might be just one bias for one day. I mean, this is like 500 points. So, I mean, that might take some time to get down there. Or if we invert this, then we might be thinking back up to the top side. Either way, like between this 199 and 400, it's a 200-point trade, right? So there's definitely opportunities there to take and get wins. It's just really about being able to align yourself with that, dropping down to the lower time frames, finding the power of three, and finding a similar situation. So I'm gonna bring up gold. I know people love gold. Everybody loves shiny things, shiny ball syndrome. Um, for me, again, gold is interesting. There's a huge wick here. I called this out a few weeks ago. I said I wanted to see the market run through this low and take this high. And this was a very easy read. And the one thing about like I love social media because it gives me the power to see people who are trading with my like same set of knowledge like 5 years ago, 6 years ago, right? Like just getting into this and they're excited about trading. Like I was just talking to this person online and they were like, I just made $6,000 today. Why do I still have a job? Or why do I still want to go to college? And I said, I literally told them, I was like, look, man, you still want to go to college because like trading is not always going to be $6,000 days. It's not always. It's not. Sometimes it's not even going to be a $500 day or $100 day. Sometimes it's going to be a $6,000 loss, right? And so, like to have that mental stability, I think one of the best decisions I ever made was going back to school and getting an MBA and being able to like have money setting aside so I can let this trading thing grow. Because if you try to force these markets, you will lose every single time. And so I think your trade. I think trading is a good thing that like you need to have a separate income. Like these traders on Wall Street, the best ones, I mean, they're not 100% commission, right? They're not just working entirely on their trades. The firm gives them a salary and they like are living off of that while they, are learning. And I think the best firms do something similar to that. And so you have to have some type of side income. This is like any other entrepreneurial endeavor. If you go all in, don't get me wrong, there's somebody that went all in on trading and it worked out, but there's a shit ton more people that have lost everything trying to go all in. And so you need to be able, from a psychology standpoint, to lower the amount of stuff that you are like worried about or that can get in the way of your trading. And if you're worried about paying your rent while you're taking this trade, you're probably going to do something stupid. So get secure and then trading. Trading is not a it's this is not a broke person's game. And I hate to like I know this like I hate to say it like that, but this is not a game for people that are not established. Like you have to get established first and then do this, or else you're gonna be in the same loop over and over and over again. And I was in that loop for years where I would try to make as much money as possible and then I would blow it because I didn't necessarily have stability. And so going back to school, doing that stuff was the most important thing for me. What's going on, Tony? What's going on? Uh, so gold though. I mean, I call this out again. I don't trade gold. If I look here, probably over the last couple of weeks, there's probably some great setups here though. Let me put this back. C5. So, cool. Let's take a look at all these. It's really the last 2 weeks. Yeah, strangely enough, there hasn't really been a ton of great setups that I would have taken. A lot of Asian session movements. So I wonder what that's about. Again, I don't really trade. I don't really care about trading Asian session. I've seen that's also really popular now. And I think like everything is cyclical. Like a lot of people have a lot of different strategies and a lot of different ways of seeing the market, and everything is cyclical, right? Every strategy works to a certain extent. It's just how often does it work, and do you have confidence in that system, right? And so I have extreme confidence in my system and my ability to see the charts and break things down. And there's a lot of people that strategy hop, thinking that um, that they're going to try something new and it's just going to be winning with them. And I hate to break it to you, but you're the reason why your strategy is not working because there's somebody out there that can operate that same strategy with a high hit rate or high win rate or high profit rate or whatever you're measuring. You It's more of you. It's probably more based on your emotions. Now, there's some things that probably just don't make sense for the market, but for the most part, I mean, all we're doing is buying low and selling high, right? And we're just saying we have a bunch of different ways of trying to say how I'm going to buy low and sell high. So coming into this week, I love the fact that we traded into this gap, this order block. We know that again, my students know that the strongest fair value gaps you're going to see are the ones with the order blocks next to them. Traded into this, respected this, traded all the way down past constant encroachment and wicked all the way back up same week. That's great. Again, I will call this out a few weeks ago. I want to see the market take this high. What I'm wary of is that we took out last week's high and then traded back in the range. I'm gonna measure this wick just to see. We are trading above constant encroachment, so ideally that's good of that wick. So what I want to see is I'd love to see if I drop down to the daily time frame. This is good too. Trading into this order block. I mean, if we got something like, shoot, I don't even know. If we traded back into this, maybe this very, very tiny fair value gap or the inverse of this, because we pretty much have just inverted this. So maybe we trade back into the inverse of this fair value gap right there. Boom. Just as something that gives me an idea that the market wants to uh, go higher. And then from there on out, it's just running higher. That's on the 4 hour time frame, but I do like this. I don't like the fact that yeah, again, we really failed to stay above. I think this was that previous week's high. So we've really failed to stay above that, but we did invert this. That's good. I do like a very solid rejection, like a very clear inversion. I don't like the inversions where they just kind of like barely tap above the high, because this is, you could just as easily see this turn around and go under. But I like if we get a very firm, like a very solid, like and it's not really something you can really define. I don't have like a pip count or a point count, but it needs to be like solidly out of this gap. Like when you see it just peeking over like that and it's still very close to this, there's still some room for error, room for margin where that could turn around and just dip and respect that gap. So I like to see my inversions like before taking this high, somewhere like maybe like a middle range between the inversion and the high. So maybe like I'd love to see it get above that that way I can clearly see that this market is no longer interested in this, and maybe we can start to attack last week's high. Right. So that's ideally kind of like lower time frame stuff, but higher time frame. What I'm thinking about and thinking of is consequent encroachment. Is I'd love to see this market, and this is just a really weird time for gold, an interesting time for gold, where there's a lot of volatility here. So I don't think we'll have an issue getting through this, but let's see. I want to see the market go through that level there and really respect consequent encroachment on the way up. Again, in a normal market, I mean, I would be probably cautious about buying before we hit consequent encroachment. But I think if we take out this high and stay above it, I think I would be more like apt to want to participate in that market. Again, this is not financial advice. This is me just educational advice and just kind of laying out my thought process on things. Please don't take my signals, because these are not signals. Don't take them as signals. And so, but the way that I'm looking at this, the way that I'm thinking about this is that I would love for the market to stay above this level here and then run higher. And I think if we close above this, then there's probably a strong chance we're going to get back up to this high. Anything above consequent encroachment for this week is probably just, extra confirmation. So I think that's all I got for you guys this week. I'm going to go ahead and end the call. I can't pull up my trades for this week, so hopefully Tradeify has their issue all figured out, and I can actually pull up those trades next week. But really solid trading week this week. Was able to overcome a loss and still turn it around into a very profitable week. So I'm excited about that. I'm excited to start showing you guys some of these payouts that I'm going to get from Tradeify. And then, hopefully the alpha futures, and really my goal with the prop firms. I can show you this too. Actually, I could show this. I don't think I could show the actual charts themselves. For some reason, yeah, I don't know why it's not pulling up. Because the markets are closed. But yeah, total balance 8, accounts, technically $1 million in funding. But really just, been able to, each of these accounts, the 100,000, 102, 101, these all started with a $100,000 balance. Everything else here was starting with a 150K balance. That's a $9,000 profit on that one. That's a almost 5 or 4K profit. That's 2,300 profit, 1,200 profit, 101 profit, or sorry, 1,200 profit, 4,157, 7,000, almost 8,000, 6,000, and almost 5,000. So Definitely making my way on these accounts for the year. Again, some of these are the alpha ones are again transparently challenges, right? Everything else is a funded account where I'll actually get paid out on. So I think I just have to get to like 160 on each, 161 on this one. The rest of them just need to get to 9 for the first level of payouts. But the way Tradeify is structured is that, over time your payouts get easy. So for the first round, you got to get to one you got to get to 9,000 on the first one, and then after that next one you have to get to 4,500, and then you have to get it down to 3,500. So it gets easier. So by the time I go to that third or fourth payout, the payouts will be like very, like 3,500 to get paid out 3,000. It's pretty much like a 1-to-1. And so at that same time, I'm also going to be trying to attack a new firm each month, right? So Alpha is this month. Next month might be like Top Step or My Funded Futures or something like that. And so just keep growing the amount of firms that I'm funded with. And yeah, so hopefully we get there before the end of the end of the year, or the end of the year. We'll be funded with pretty much every futures prop firm, and can really have some killer days there. So I'm excited to see what this is going to do, and just excited to take my time and get through it. So hopefully you guys enjoyed this. And if you guys have any questions, feel free to find me on social media at Brinks Trades. Thanks. Peace.